Hello everybody. In this video I'm going to talk about my favorite setup. It's one of the easiest ones that I use, one that I look at going into every week. I'll be using Euro USD as an example for this one. It does require having a bit of a daily bias, but it's nothing too crazy, so I'm going to try to simplify it as much as possible. Okay, so I'm going to write down the steps here, and I'm also going to show you an example with last week's price action. So first things first, what we want to do is we want to go to the daily chart and you want to identify the structure, right? So what does this mean? This means that you want to recognize whether the current structure, or price currently is bullish or bearish, right? The way you do that is you use the market structure. So if you're forming higher highs and higher lows, for example over here, you formed a high, a higher low, a higher high, a higher low, right? So you're at that point you're expecting this local bullish structure to continue. This constitutes a bullish structure, right? On the other hand, if you have a bearish structure, you're forming lower highs and lower lows. So from here we had a high, we had a low, a lower high, a lower low, and then another lower high. So now we're expecting a lower low, and we got this last week's candle, right? 2 weeks ago, 22nd of March, right? So now what we're expecting is, okay, we know there's a bearish trend, so we're definitely looking for further downside. But the question is, where do we enter? So we want to figure out where the next lower high is going to be, so that we can be part of the next lower low. Okay, so that's essentially what we're doing. Okay, so now that we've identified the structure, we know that our bias is bearish. We next want to mark out the swing highs and swing lows, okay, on the daily time frame. So what's going to happen, I'm going to mark out swing highs and lows, right? And this is going to help with finding potential targets, right? So if I'm bearish, I'm actually looking for swing lows. Where's price trying to go to next, right? So that's going to be this right here. We've got a swing low, but we're pretty close to it. But this is like the easy target, right? It's the next one, and then obviously you've got this swing low all the way down here as well. So those are the two main swing lows that I've marked out as potential profit levels. Okay, so we've established a bias, and we've kind of got an idea of where price is trying to go, right? It's trying to go to this low and then potentially this low next. Beyond that, now we need to figure out where's our entry. So the way I do that is you want to mark out your PD arrays on the daily. So this includes fair value gaps, order blocks, breakers, whatever is going to be present, right? So over here, actually, you notice we've got this up close candle followed by two down close candles that engulfed it. So this now is actually a bearish order block, right? So on the daily time frame, this is actually one that really interests me. Now, personally, I don't like seeing an order block by itself. I want a fair value gap to form as well, right? And then an order block within that usually makes it a better high probability trade. We don't have a fair value gap yet, just because we would need another candle here on Monday, right? But actually, so this is why I wouldn't have traded on Monday. I would have waited a little bit. But if we just go through one candle, so you see now that's Monday. That was Monday's candle. And we actually did form a fair value gap, and it's this little pocket right here. Okay, so that's the fair value gap, and within it you've got this order block. Now keep in mind, this wick by itself is not the order block. It's some people like to use the whole candle. I like to use the wick to about the midpoint of the body of the candle. So it's a relatively large range, right? But that's essentially the idea. So it's not just this, it's going to be a range of values. Okay, so what we're looking for now is a short entry within this fair value gap inside of the order block, right? That's what we're looking for. But like I said, it's a really big range. So what we want to do next is we want to go to the 4-hour time frame and mark the PD arrays. So again, fair value gaps, order blocks, breakers within the daily ones, or really close to the daily ones, right? So for example, right here, if I go to the 4-hour chart right here, so I'm going to bring all of this here. If I go to the 4-hour chart, you notice there's this fair value gap over here, right? So this is the 4-hour fair value gap. and then you've also got this this right here, right? So that's your 4-hour order block. Okay, so why did I not mark out this order block or this fair value gap? Because now we're pushing further and further away from a key daily level that is where I'm actually interested in, right? So I'm not going to mark those out because it requires this daily level to be broken, and I really don't want to see that, obviously. So these are the levels that I'm interested in. Now once they're marked out, what I'm going to do next is I'm going to wait for price to tap it during a kill zone. Wait for price to tap during kill zone, right? So New York would be 7 to 9 a.m. Sorry, 7 to 10 a.m. Eastern Time. London would be 2 to 5 a.m. Eastern Time. Now this is still Monday. Monday, and are we on Tuesday? There we go. Okay, so now we're at the start of Tuesday, right? And this is just about London sessions. If I go to the 15-minute time frame now, well, that's what I'm going to do. Actually, that's the 6th step. Yeah. So let me write that down. Where is it? Go back to 4. What you're going to do once price taps it is switch to lower time frame and look for a reaction. By reaction, I mean a market structure shift and engulfing, something along those lines. Okay, so I'm going to go down to the 15-minute now, and let's see, we are right here. So I'm going to bring all of this here. Okay, so we're right here. You notice that, okay, we did tap it during London. We came into this daily fair value gap, the 4-hour fair value gap, but there's no shift in structure over here, right? So if I just go closer, the last low, the last real swing low was made at this area, right? So there was no structure break here. So this is not an entry for me. Now, where's New York? New York opens right here. So that's 7 a.m. Eastern Time. Right, so that's the New York kill zone, and that's the start of it. So now if I just kind of let price go forward a little bit, you notice how price is tapping those levels right. There we go. We hit the 4-hour order block right before the New York kill zone, and so now New York kill zone has started. So I'm looking for a shift in structure or some sort of a reaction, right? And you notice, well, let's see, what do we have? So this right here, this is our last swing low. And bang, you get a big push down, you get a break of that swing low, and now we go to the final step, which is we look for our entry, right? Or you take your entry. So we just put that down there, right? Right. This is like just a very basic thing to look for. So now you're on the 15-minute time frame. You got to shift in structure after tapping a higher time frame level that's aligning with your bearish bias from the daily, right? So now what you're going to do is you're going to enter at a 15-minute PD array. So for example, for me, it's this order block, right? And I'm going to take, now you could take it down all the way to your daily targets. I did not do that for this week simply because it would have required me holding for multiple days, right? I took it down to these lows, right? So it was a solid 2.6 to 1R trade. So now if I just let this play out, I would have already gotten my entry right there. Right, and eventually price pushes lower, and there you go, it hits the target. Okay, so in summary, you're going to start off from the daily chart. You're going to identify your structure. If it's making higher highs and higher lows, you got to pull the structure. If you're making lower highs and lower lows, then obviously you got a bearish structure. Once you figured out your bias and the position you're looking for, you are going to mark out your PD arrays on the daily, right? So in this case, we have this daily fair value got marked out along with this daily order block. Right, so once price entered here, that was when I was going to look for shorts. To refine my areas of entry, I wanted the 4-hour chart, and I also want to mark out the 4-hour PD array. So for example, this 4-hour order block and this 4-hour fair value gap. Okay, once price taps it during a kill zone, I am going to look for a reaction by switching on to the lower time frame. And that's exactly what I did. Right, I'm on the 15-minute time frame right now. We got a shift in structure, and that gave me my final step, which is an entry. All right, good luck.